Hey everyone, and welcome back to Pension and SSI Updates. In just a few weeks, 71 million Americans are getting a raise on their Social Security checks. Starting January 2026, your monthly payment is going up by 2.8%. For the average retiree, that's an extra $56 per month. But before you celebrate, there's something critical you need to understand about this increase that nobody's talking about. And by the end of this video, you're going to know exactly how much extra money you're getting, when it hits your account, and why it's probably not enough. Hit that like button right now because this affects millions of people who need this information. Let's get into exactly what's happening with your money. Here's the bottom line. The 2026 cost of living adjustment is 2.8%. That means every Social Security benefit increases by 2.8% starting in January. If you're currently getting $2,015 per month, which is about the national average for retirees, your new payment will be $2,071. That's $56 more per month, or about $672 extra for the year. If you're getting $1,500 now, you'll get $1,542 in January. If you're at $2,500, you'll jump to $2,507. Whatever your current benefit is, multiply it by 1.028, and that's your new amount. Now, $56 extra per month sounds good on paper, but let me tell you why this increase doesn't go as far as you think. Your Medicare Part B premium is also going up in 2026. The standard premium is jumping to about $185 per month, an increase of roughly $10 from 2025. Since most of you have Medicare automatically deducted from your Social Security check, that $10 increase comes right out of your COLA raise. So your $56 increase just became $46 in actual take-home money. That's before we talk about anything else going up in price. And here's what really frustrates people. The 2.8% increase is based on inflation data, but it doesn't reflect what seniors actually spend money on. The formula uses something called the CPIW, which tracks spending patterns for urban workers. But you're not an urban worker. You're a retiree. You spend way more on healthcare, prescriptions, and housing than the average worker. And those costs are rising faster than 2.8%. Your grocery bill isn't going up 2.8%. It's going up 6%, 8%, maybe 10% depending on what you buy. Your homeowner's insurance isn't increasing 2.8%. It's doubling in some states. Your property taxes aren't up 2.8%. They're jumping way more than that. So while you're getting 2.8% more money, your actual expenses are increasing faster, which means even with this raise, you're falling further behind. Your buying power is still shrinking. And that's the reality nobody wants to admit. Before we go further, subscribe to this channel and turn on notifications. I break down every Social Security update in plain English, so you know exactly what's happening with your benefits. Don't miss future updates. Subscribe right now. Let me give you the specific dates and details you need to know. If you receive SSI, your increased payment comes early, December 31st, 2025. That's when SSI beneficiaries see the 2.8% bump. Why early? Because January 1st falls on a Wednesday, and SSI always pays on the first of the month. When that falls on a weekend or holiday, they pay the business day before. So SSI recipients, your higher payment hits December 31st. If you receive regular Social Security retirement or SSDI, your increased payment comes in January 2026 on your normal payment date. Remember, Social Security pays based on your birthday. If you were born between the 1st and 10th, you get paid the second Wednesday of the month. If you were born between the 11th and 20th, you get paid the third Wednesday. If you were born between the 21st and 31st, you get paid the fourth Wednesday. Your January payment will be the first one reflecting the 2.8% increase. You'll get a notice about your new amount in late November or early December. You can check it online through your My Social Security account at ssa.gov. If you don't have an online account, set one up. It's free, it's secure, and you'll see your new benefit amount as soon as it's calculated. You'll also get a physical letter in the mail in December showing your 2026 benefit amount. Now let me talk about the maximum benefits, because some of you want to know what's possible if you've paid in at high earnings levels your whole career. If you retire at full retirement age in 2026, which is 67 for most people, the maximum possible benefit is $4,152 per month. That's up from $4,018 in 2025. But understand, very few people get this maximum. You'd need to have earned at or above the maximum taxable limit for at least 35 years and wait until full retirement age to claim. Most people get way less than the maximum. Here's another change that affects workers. The maximum amount of earnings subject to Social Security tax is going up to $184,500 in 2026. If you're still working and you earn more than that amount, you'll pay Social Security tax on more of your income next year. This doesn't affect retirees, but if you're working and earning between $168,600 and $184,500, you're paying more in payroll taxes in 2026. Let me address something I know many of you are thinking. Is 2.8% good or bad compared to previous years? Well, it's better than 2025's COLA, which was 2.5%. So you're getting slightly more than last year's increase. But compare it to 2023, when the COLA was 8.7%, or 2022, when it was 5.9%. Those were much bigger increases because inflation was running hot. Now inflation has cooled down, so the COLA is smaller. But here's the problem. Your costs haven't cooled down at the same rate. Food prices are still way up from where they were 3 years ago. Housing costs are still elevated. Healthcare keeps climbing. So even though inflation has slowed, you're still dealing with prices that are much higher than they used to be. Let me give you some real talk about what this increase actually means for your budget. If you're barely making ends meet now, an extra $56 per month isn't life-changing. That's about $1.85 per day. It might cover a couple gallons of gas, or a few items at the grocery store, or part of one prescription. It helps, but it's not solving your financial problems. If you're struggling now, you'll still be struggling in January. This is why financial planning matters so much. You cannot rely on Social Security COLA increases to keep up with your real expenses. You need other strategies. Let me give you some practical advice. First, if you're not retired yet and you're planning when to claim Social Security, delay as long as you can. Every year you wait from 62 to 70, your benefit increases about 8% per year. That's way more than any COLA will give you. If you can work until 67, 68, 69, or 70, you're locking in a permanently higher benefit that then gets COLA increases on top of it. Starting from a higher base makes every future COLA more valuable in actual dollars. Second, track your actual expenses. Don't guess. Write down what you spend on housing, food, utilities, insurance, healthcare, transportation, everything. Then look at what increased the most over the past year. Those are your problem areas. Can you find ways to reduce those costs? Switch insurance companies? Move to a cheaper living situation? Cut cable or subscriptions you don't use? Small cuts in multiple areas add up. Third, if you have any high-interest debt, attack it aggressively. Credit card debt at 20% interest will destroy you. A $3,000 credit card balance costs you $600 a year just in interest. That's more than your entire COLA increase gone just to interest payments. Pay off high-interest debt as fast as possible. It's the best return on your money you'll ever get. Fourth, look for ways to supplement your income. Can you work part-time? Can you rent out a room? Can you sell things you don't need? Social Security alone isn't enough for most people. Any additional income, even $200 or $300 a month, makes a huge difference in your quality of life. Fifth, take advantage of programs you might qualify for. SNAP benefits, energy assistance, prescription drug programs, property tax relief for seniors. Many states and local governments have programs specifically for people on Social Security. You paid taxes your whole life. Don't be too proud to use programs you're entitled to. They exist to help you. Now let me tell you what to watch out for. Every time there's a COLA announcement, scammers come out in force. You're going to get phone calls, emails, and text messages claiming to be from Social Security. They'll say you need to verify your information to get your increase, or pay a fee to process your new amount, or confirm your bank account for the higher deposit. It's all lies. Social Security will never call you asking for personal information. They will never ask you to pay anything to receive your benefits. They will never threaten you. If anyone contacts you claiming to be from Social Security and asking for information or money, it's a scam. Hang up, delete the email, block the number. Your COLA increase is automatic. You don't apply for it, you don't request it, you don't verify anything. It just happens. In January, your payment will be 2.8% higher than December. That's it. Anyone telling you otherwise is trying to scam you. Here's my honest assessment of the 2.8% COLA. Is it better than nothing? Absolutely. Does it help? Yes, every dollar helps when you're on a fixed income. But is it enough to truly keep pace with what seniors are experiencing in real cost increases? No, it's not enough. And that's been the pattern for years now. COLA increases consistently lag behind the actual cost increases that retirees face, especially in healthcare. The fundamental problem is the formula. Using CPIW for urban workers doesn't reflect senior spending. There's actually been proposals in Congress to switch to a different index called CPIE, which is specifically designed to track elderly spending patterns. That would result in higher COLA increases because it would properly account for healthcare and housing costs. But Congress hasn't passed it. They keep talking about it, but nothing happens. So what can you do about that? Get politically active. Call your representatives and tell them the current COLA formula isn't working for seniors. Tell them you support switching to CPIE. Vote for candidates who prioritize senior issues. Join advocacy groups like AARP that lobby for better Social Security policies. Your voice matters. When millions of seniors speak up, Congress has to listen. One more thing I want to mention. Your 2026 COLA increase is locked in. That's happening. But you need to be aware of the bigger picture with Social Security. The trust funds are projected to be depleted by 2034. When that happens, if Congress doesn't act, benefits could be automatically cut by about 19% for everyone. So while you're getting a 2.8% increase now, there's a much bigger cut potentially coming in less than 10 years. I've made detailed videos about that crisis. Go watch those after this one so you understand what's coming and how to prepare. All right, let me summarize everything you need to know. Starting January 2026, all Social Security benefits increase 2.8%. The average retiree goes from $2,015 to $2,071, an extra $56 per month. SSI recipients get their increase December 31st, 2025. Regular Social Security recipients get it in January on their normal payment date. You'll get a notice in late November or December showing your new amount. Check your My Social Security account online to see it. The maximum benefit at full retirement age goes to $4,152. The maximum taxable earnings go to $184,500. Medicare Part B premium increases eat into your COLA raise. The 2.8% is higher than 2025's 2.5%, but still doesn't keep pace with real senior expenses. It's automatic, you don't apply. And watch out for scams claiming you need to do something to get your increase. If this video helped you understand your 2026 increase, do 3 things. Subscribe to pension and SSI updates and turn on notifications. Share this video with friends and family on Social Security. And comment below telling me what you're going to do with your extra $56 per month, or if you think the COLA is enough. Your Social Security is going up. That's good news. But stay informed about the bigger challenges ahead. Thanks for watching. I'll see you in the next video.